shows that the amount of cash you are having is reducing. That is why your cash is going out, because you are paying for the rent. Your cash is going out. You understand? Your cash is going because you are paid for rent. That is liability. You are settling your liabilities. Now, let's check here. A liability. You credit your cash and you debit your rent. Rent happens to be what? An expenses. Because for the sake of your business to continue, you have to pay for the rent. And you debit what? Expenses here is debit. So I hope you are getting it. Now, let's check another question. We're almost done. I want to bring critical questions that you can meet anywhere. Cash sales. This one is cash sales. The two accounts you don't need to think about is cash and sales. So you are going to rule. Now, cash sales. You make sales, but they paid you what? Cash. So who is receiving and who is giving? Cash sales. Cash is receiving and sell is giving. So you are going to debit your what? Your cash and credit your sales, because sell is giving and cash is receiving. So you put cash and sell. Now, when you sell, you understand here. Now, let's go back here. When you make sales, your assets increase. And where is the asset? You debit it. When you make sales, you generate revenue. And where is your revenue? You credit it. This is your revenue. It has a credit balance and your cash has a debit balance. You understand that? So you come here and put sales 1,000 naira. Yeah, you put cash 1,000. I'm not putting date here because the question we aren't carrying date, but in the question we will be meeting consequently that you'll be solving, will be coming with date. Please don't forget to put the date and the debit and the credit sign. So I hope you understand that. Now, this is what cash purchase. We've done sales purchase. Sorry, we've done cash sales. Now it's cash purchase. I'm trying to be fast so that the video will not be too long. Cash purchase. What is the two account? You don't need to think too much. The two accounts here is cash account and sales account. And we're going to open our this. Then you put what? Cash purchase. Now, who is giving? Cash. Remember, you are purchasing. I am purchasing. And if I'm purchasing, I'm using what? Cash. It's either I use cash or check. But in this case, I'm using what? Cash. So who is giving and who is receiving? Purchasing is receiving. Cash is giving. Why? Because our cash is going out to get us what? Some goods. Now, if this one is confusing to you, you turn here. So just look for the one that will be convenient for you to use and use it. Your cash is an asset. Your purchase is here. When you purchase, will come down to asset also. Now listen. When the cash originally ought to be an asset, but because it's going out to settle a liability, it's going out so that we can get our goods, our cash is reducing. So in this case, since we are our aim, we are the one purchasing accounts, credit, debit. Here is your cash account, credit, So whenever your cash is reducing as a result of purchase, credit your cash. Whenever your bank is reducing as a result of purchase, credit your bank. If this thing has been on credit, if the purchase has been on credit, you will see somebody's name here, signifying that we are owing that person. But since it is on cash, we are not owing anybody. We've settled the liability. We have settled the person. You understand? So the purchase is here. You debit your purchases by cash, 2,000. Then you credit your cash by purchases, 2,000. Hope you understand. Hope you get this. Whenever you are purchasing, money is going out. And that money that is going out will be what? Credited. And the goods in which you purchase will be debited. If you purchase pen and pencil, it will be debited. If you purchase motor van, it will be debited. If you stock up your goods, it will be what? Debited. But the amount you spend in getting those things will be what? Credited, because your cash is reducing. And what you are buying is increasing your assets, your stock. And some will be expense. And when it is expense, it becomes an expenses. When it increases the value of your company, like an asset, become an asset. All of them goes to what? Debit side. I hope we are understanding. Now, this is cash sales, credits, cash sales, and cash process. Cash sales, when you sell and nobody is owing you. When you sell, your cash is increasing. You debit cash and credit your sales. When you purchase with cash, your cash is reducing. Debit your purchase and credit your what? Your cash. Is that clear? Let's check next question. Sorry, we're almost done. We'll be very fast. And this one is one of the one again that I want to present to you. Withdraw check for private use. Who is withdrawing check? I am the owner of the business and withdrawing check for private use. What are the two accounts here? The two accounts here is and withdraw. This one now, withdraw will now be drawing. Here will now be bank, because it's check, bank. Withdraw, drawing, because I, the owner of the business, is what? Taking out money from it, not for the business purpose, but for what? For my personal use. Now, if you check here, you find out that the drawing here is a debit balance. So you debit your drawing, credit your bank, because for him to withdraw money, that means the cash in the bank is reducing. So you debit your bank, you're drawing 1.5, then you credit your bank by 1.5. So that is all. Now let's use this method. Who is giving and who is receiving? The business is giving. The business is giving who? The owner some money. Now, the business is giving you credit bank, because the money in the bank is reducing. And the owner of the business is the one receiving. You debit it. Now, mind you, is not our debtor. He invested 2,000 naira in the business, and decide to take out 500 naira for personal use. So his stock automatically decline. We are not owing him. He's not going to appear as a debtor. He can decide to contribute the money again. His capital will increase. If you remove again, it will decrease. So that is just the effect. Now, let's check the second withdrawal. Withdraw 1,000 naira cash from bank for office use. Now, this one now is for office use. This one now is for office use. What are the two accounts here? The two accounts you see here is cash and bank. Is it funny? Cash and bank. Now, withdraw 1,000 naira cash from bank. Who is giving and who is receiving? From bank. Bank is giving. Cash is receiving. So we're going to debit cash. Then you credit bank. Now, mind you, when you withdraw money from the bank for business purpose, the cash at hand is increasing, but the cash in bank is reducing. That is the implication here. The cash what in bank is reducing, while the cash at hand is increasing. So here, bank, how much? 1,000 naira. Here, cash, 1,000 naira. Maybe there is no money again to run the business, the interest of the business, the interest to buy little things. Then you decide to withdraw money from the bank. Now the cash at hand has increased. That is why you are debiting cash. And the money in the bank has reduced. That is where we are crediting our bank. Hope that is clear. Hope that is clear. Please, if you have any question, don't fail to put it on the comment section. Now, let us do this. Let us do this. I don't know why this thing is blurring. Okay, let us do this. Okay, yes, you can see it now. Okay, let's do this. A photocopy machine was purchased for office use at a cost of 250,000 by what check on 1st January 2022 from Chill Limited. These are the two accounts. First account is what? Office equipment. Office equipment, and the second is what? Bank. If you put photocopy machine, you are not wrong, but it is photocopy is under office equipment. That is why I'm putting office equipment. Yes, it's under office equipment. Now, here, using this formula, you don't need to think two times. Photocopy machine is an asset, debit or asset. You credit the corresponding account. And what is the corresponding account here? The bank. So here, you debit. This one has date 15/1/2022, bank 250,000. Then here 15/1/2022, office equipment 250,000. Now let us use this one, this method. Hope you understood this method. Now let's use this method. A motor photocopy machine was purchased for office use. Who is receiving and who is giving? Now mind you that bank, we are receiving because we did what? We purchase. I am receiving. And when we receive, we give out what? Money by check. So the person that will purchase from is receiving, but because we paid by check, his name won't appear here. So we represent the person with bank. We give bank for them to give us photocopy machine. Now we receive photocopy machine by giving out money. You understand? That is that. So I think it will just serve about. Sorry, it's taking too much. I don't want this video to be too long. Now, let's just, the proprietor put a further 500 naira into the bank. The proprietor now, I am investing again. You have bank capital because I am reinvesting. I am putting money into the business again. The money, the cash in the bank is increasing. Then capital 500 naira, then you credit your capital by 500 naira bank. Watch here. Your capital is a credit balance, and your cash is an asset. It's a debit balance. So that is that. I want to rush it. Receive loan 1,000 naira from Austin. Receive loan 1,000 naira from Austin. Now, receive loan 1,000 naira from Austin. Mind you, we are the one receiving because what? The cash, our cash is increasing. Now, what are the two accounts here? Austin and cash. Cash, there here I put Austin because we are collecting loan from Austin. Here, your cash will increase, so you debit your cash. Austin, 1,000 naira. Then here, loan. Austin is here, we put cash because we received the loan from Austin by cash. 1,000. Is that okay? 1,000. Is this one clear? Because we receive, and now Austin, now we are not owing Austin. That is the implication. When you use here liability, Austin now is now our liability. That's why we're crediting, and our asset is increasing. That's why we are debiting, because money is coming into the asset. I think with this video we can wrap up. With this one we can wrap up. I have one more question here to solve. Let's see if I can solve it within 1 minute. Now, receive of refund of insurance 1,000 naira by cash. We are receiving a refund. We are receiving what? We are receiving a refund from insurance company. So we have two accounts, cash and insurance. Cash, insurance. Now our cash is increasing. Insurance by what? 1,000 naira. That we credit insurance by cash because they gave us the money in cash. Is that okay? We are receiving. We are receiving. You debit the receiver. Who is giving? Insurance is giving. We credit the insurance. Here, asset is increasing by cash. We debit our cash. And you credit the insurance. So that is that about that. This one say return goods worth 2,000 naira to us by Adams. The goods is coming in. We are the one receiving. And Adams is giving us. So we are going to do what? Debit Adams here by what? 2,000 naira. We credit returns inward by 2,000 naira. Now, Adams is returning these goods to us. Our stock is increasing. then we credit what? Adam, because the corresponding account is Adam's. So that is that about that. Please, if there is any question about this, don't fear to ask me. Put it on the comment section. We are going to do more and more of this. Thank you very much.